Welcome to This Week in Money. I'm Jim Goddard. Today, market historian Bob Hoye from chartsandmarkets.com looks back at the action on the major markets over the past week and discusses the U.S. Fed dropping interest rates for the first time in over a decade. Doug Casey, founder of Casey Research, gives us his views on gold, pharmaceuticals, fiat currency versus cryptos, and on how shaky the Chinese economy is. Speaking to us from San Diego, Robert Campbell, publisher of the Campbell Real Estate Timing Letter, comments on U.S. real estate markets and where the cracks have started to appear. He also has some very interesting views on health and wealth. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO Larry Reaugh. We'll talk to Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to This Week in Money, Bob.
Yeah, well, it's been This Week in Money has been an interesting in the exchanges where they trade money all of the time.
And what stood out for you this week?
Well, the big deal, of course, was the announcement by the U.S. Central Bank, the Federal Reserve, that they were going to cut interest rates. We call them the administered rate. They call it the Fed funds rate. It used to be called the discount rate. But the interest rates that trade all the time, like the T-bill rate, the 3-month T-bill rate, when it goes up, it says the boom is on. And when it goes down, it says the boom's probably over. And interest rates, the T-bill rate rose until March, and then it came down, and came down quite steeply. So my guess is that most of the economists now are saying that there's no reason why the Fed should lower the rate because business looks good. But then I point out that it's following what market rates are doing, and in order to look in charge, they then have to lower the rate. Now, the decline in the T-bill rate was more than 40 basis points, and all the Fed dropped was 25 basis points. So it's a bit of a chicken move anyways, but it sure pushed the markets around. It was down for the week in the stock market. The S&P dropped for it looks like 5 out of the last 5 trading days. And then, but the bonds, the long treasuries and long Canadas, rallied very smartly. So, anyways, it's and some commodities were weaker. Base metals were weaker on the week. Copper, particularly. Lumber was weaker, and crude oil really didn't go anywhere. It was sort of backing off a bit. So, there's not been much strength in commodities, which, if the global economy was booming, Jim, there would be a pretty good bid for industrial commodities. So it ain't there. The other one, as I say, the T-bill rates are coming down for a reason, and one of it could be that careful money likes to go to the most liquid items when it becomes a little uncertain out there. And short-dated Treasury bills in U.S. dollars is a very safe place to go to. So part of that is there. The other one that they find liquid in times of concern, of course, is gold. And gold has had the good innings here for the last while. So it's been a very interesting week. I think that the big noise was the Fed discount rate, or the Fed funds rate cut. But there was more noise than anything else. The bank stocks didn't do so well this week. And then there's one index we watched, the broker-dealers. It got hit fairly hard today. So And then you've had the transports, which often lead moves in the Dow. Transports have been underperforming for a few months now. So the stock markets have been very good in North America. They have been exceptionally high by way of valuation, measured against GDP or against average wage, very high, much higher than at the top in 2007, and even higher than in the crazy dot-com bubble in 2000. So valuations are high. And then the other one's a little more technical, and that's our momentum and other wizardry. And at various times you've had really terrific momentum, which is what you often see at or near important tops in the stock market. And the other one, Jim, you get with that too, is sentiment. Like you keep track of what all the market advisors are saying out there, and you end up with a stock market sentiment, and it got up like, sorry, I haven't got that number, but the percent bulls, the percent number of letters that were bullish were at a very high percent, seen again only at or near important highs. So then what we want to look at is you accept that it's high, so you say, okay, now maybe we should take some money off the table. It's been very good to us for the last few years. And then you say, now where and when is the risk going to be there? If you have exceptional action on the upside, eventually it's going to get the downside. And we know from ancient work that if there's going to be a financial problem, it's more than likely going to be discovered in the fall. So our view for this year, Jim, was that pretty good action in the first half. We used the term sunshine, and the sunshine could run maybe to about mid-year. And then August we thought would describe it as the twilight time. And with the stock market selling off a bit and industrial commodities weakening, it's maybe the sun is diminishing. And then after August, we've been calling for the twilight zone, duty, duty, do. You remember that scary TV series? Well, the twilight zone could be on in the fall. So markets have been very kind to people this year, and the way to take advantage of that is to take some money off the table.
Bob, thank you so much for being on This Week in Money.
Good to be with you, and we look forward to talking with you anytime.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Coming up, Doug Casey, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Doug Casey, founder of Casey Research. He's also the author of Drug Lord, part of the High Ground series, available online at highgroundseries.com. He's speaking to us from Vancouver. Welcome back to This Week in Money, Doug.
Pleasure, Jim. Thank you.
What is your book, Drug Lord, all about?
Well, it's the second in a series of 7 novels that I'm writing, because you can say a lot of things in the form of fiction that you really had best not say in the form of nonfiction. And this is a follow-up to Speculator, which came out a couple of years ago. Speculator was about Charles Knight, a 23-year-old guy who gets lucky in the stock market in a mining stock, goes to Africa to investigate it, finds out it's a fraud, gets involved in a bush war. So it's a great story with a lot about the mining business and Africa. Drug lord, however, is when Charles gets into the drug business, the illegal drug business, as well as the legal drug business. So this book explores both of those industries. And once again, he makes $100 million and has it stolen from him by the government. It's a hell of a good read. And our object is to reform the unjustly besmirched reputations of politically incorrect occupations. It's kind of a mouthful what I just said. But no, they're great reads, so I urge people to pick them up.
Did you learn a lot about the drug industries while writing the book?
Listen, like a lot of guys of my generation, I toyed with getting into the drug business back in the old days when it was possible to rent a light plane, because I was a private pilot, fly to someplace in Mexico, put a bale of pot in it that you'd buy for nothing, fly it over the border, dump it into a field where a Confederate would pick it up in a truck, and you could do things in those days. But now the border is heavily patrolled, and the penalties are draconian and so forth. So, yeah, I mean, and of course I've known a lot of people in the business, but sure, we investigated the drug business. My co-author, John Hunt, is an MD, and he takes it from a different angle, too. So, no, it's an educational novel as well as a fun read.
If you take a look at the economics of drugs, how significant a part do the legal and illegal drug industries play in the economy?
They're both gigantic. Now, the argument that we make is that all drugs should be completely legal. The reason why illegal drugs are so profitable is because the supply is artificially restricted. And the reason why some people get hooked on drugs, and it's mostly a psychological fault, I find, but that's another story, is because the profits are so high, it's worth the dealer's time and trouble to get people involved in drugs. You know, before the Harrison Act illegalized drugs like opium and cocaine, they were sold at corner drugstores. Anybody could buy opium, cocaine, and other things, but only a very small number of the population did. And they were looked down upon for having a moral fault. It wasn't a big problem. But today it's an epidemic, and it's basically government-caused. And at the same time, I'd say the FDA ought to be abolished. I've often said that the FDA kills more people every year than the Defense Department does in a typical decade. Why? Because they so greatly increase the costs of manufacturing drugs that many valuable medical drugs are not made that otherwise would be made, and the time that it takes to get a drug approved is typically a decade and billions of dollars. That's just one of the things the FDA does. So, like most government agencies, it should be abolished. It's a costly and counterproductive disaster.
Would those deaths include drug wars between gangs, innocent victims caught up in it, police, people shot by the police?
Oh, absolutely. Those things would not happen if drugs were completely legal and could be bought and sold like salt or sugar. Incidentally, both of them can be more dangerous than most drugs. So the government is not the cure to the problem. Laws are not the cure to the problem. They created the problem. They are the problem.
Also, if drugs were legal, wouldn't they be regulated in a way that their purity would be tested and you wouldn't be getting fentanyl mixed up in what you thought was heroin?
You're absolutely correct. You're absolutely correct. When something is illegal and under the counter, the way drugs are today, you don't know who's doing what to them, and that's killed a lot of people unnecessarily too. So there's every reason for drugs to be completely legal, and no reason for them to be illegal the way they are today. It creates all kinds of distortions, and that's another one.
Just how big is the black market for legal drugs?
Well, if you want an opioid, the easiest way to get it is to have your doctor prescribe it, and those pills are very valuable on the black market. So it's resulted in the corruption of the medical industry, where some doctors prescribe these things for profit, not because they're needed. So it's one disaster after the other. The FDA should be abolished. The DEA should be abolished. Both.
What percentage of people are constantly drugged up on either legal or illegal drugs?
You know, nobody's got an exact idea, but I'd say that the problems that result from legal drugs, particularly the SSRIs, the selective serotonin reuptake inhibitors, like Prozac and Zoloft and Paxil, so many, there's 100 of them. There are so many people that are hooked on these things, and they're very, very dangerous. They can turn you into a zombie. A lot of the shootings, and this is rarely reported. It's quashed for many reasons. But almost all of the mass shootings that have taken place in the U.S. are with people that are on or coming off of these very dangerous psychiatric drugs. I don't know what percentage of the population is on them. It's hard to say, 20%? But it's dangerous. These things ruin people's lives. If you have a psychological problem, the best way to solve it is proper diet, proper exercise, and counseling, not by being turned into a junkie on these legal psychiatric drugs.
Is it true in recent times governments have banned the release of the medical records of shooting suspects because they don't want people to know that they were on SSRIs?
It's absolutely true. Almost all of the shooters are either on or just coming off these dangerous psychiatric drugs. Now it's absolutely insane. No wonder the drug industry makes such huge donations to politicians in the U.S.
Also, by not releasing the medical results, does that hamper the efforts by drug enforcement to take a look, or by law enforcement to take a look at who might be susceptible to launching these mass attacks?
Absolutely. I mean, the best cure for corruption and all aspects of the drug industry, legal and illegal, are completely corrupt at this point. Sunlight is one of the best cures for corruption, but they keep these things under a rock, and it makes it worse. You're quite correct.
If you were the president of the U.S. with an executive order in hand, what would you do with the illegal and legal drug industries?
Well, as I said, I'd abolish the FDA and I'd abolish the DEA, the Drug Enforcement Administration, both. They're both very costly in direct expenses and even more costly in the death they cause, the people that the DEA puts in jail unnecessarily. I mean, half of the 2.3 million prisoners in the U.S. are there for nonviolent drug charges. That's criminal. I mean, the DEA and the drug laws have ruined the lives of millions of people.
Doug, what sectors are you speculating in these days?
Well, everything is overpriced today, which sounds metaphysically impossible. Everything but commodities I should say. The stock market is in a bubble. The bond market is in a hyper bubble, with the government having jammed interest rates down to, in real terms, negative levels, even in the U.S. But in Europe, there are trillions of dollars. I think the number is like 12 trillion of government bonds that have negative yields. I thought that was completely metaphysically impossible for bonds to have negative yields. So this is creating huge distortions in the market. So I am out of the stock market. Yes, I know it's going up. Out of the bond market. The place to be is in commodities. Commodities have been in a bear market since 2011, 2012. It's been a very long, very deep bear market, not just for gold and silver, but for the agricultural commodities too. Wheat, soybeans, corn, cattle, coffee, you name it. That's the place to be. And that's where I am at this point. Also, I'm speaking to you from Vancouver. I've always been involved in these junior mining stocks. They've been devastated, and now's the time to buy them, because when they run, the whole group can go 10 to 1.
Do you see gold and silver bull markets forming from here?
I think gold and silver have already poked their heads above water. They've been in this long commodity bear market. It's lasted for 7 years. And with governments all around the world creating trillions of new currency units, which they are now, and talking about reducing interest rates even further, there's going to be a panic into gold and silver. They're both going to go much higher. And these little mining exploration stocks, most of which are junk or crap, they'll all run. So I'm very, very bullish. I've always been a gold bug in that I believe that eventually gold and silver, gold especially, gold is going to be reinstituted as money, day-to-day money, certainly for settlements between countries. It's going to happen soon. But I've always been a gold bug. I'm also a gold bull now.
Your thoughts on lithium-ion batteries and electric vehicles?
I think it's the wave of the future, quite frankly. It's a question of battery technology, as you indicated. But the essence of it is that costs of the technology keep coming down. They actually are better cars. Their range is going up. They handle better. They have fewer moving parts. They're more reliable. So, yeah, as much as I love the internal combustion engine, and I've been a car guy my whole life, ex-hot rodder, I can see that the future lays with electric vehicles. With the caveat that I have no doubt that sometime in the future, there'll be something better than the lithium-ion battery. Cheaper, more effective. That's just the nature of technology and Moore's law. But yeah, it's the wave of the future.
The focus now is on lowering interest rates. Which markets would benefit from lower rates?
None of them, quite frankly, because what they've done is they've created a house of cards 100 stories high by artificially jamming interest rates to these low levels. It's created huge distortions, huge misallocations of capital in the marketplace. The lower and the longer interest rates stay low, the longer they stay low and the lower they go, I should say, the bigger the collapse is going to be. But at the same time, they're afraid to let interest rates go to normal levels because nobody wants to see the collapse, which is inevitable, occur on their watch. So it's a big problem.
If you were president of the U.S., what would you do to get rid of the national debt?
Look, what you've got is, as I said, a 100-story building that's been built up upon a foundation of quicksand. It's going to collapse. So what do? Do you wait for it to collapse accidentally at any time, unpredictably, or do you have a controlled demolition? I think what the U.S., what it's going to do, directly or indirectly, is default on its national debt and default on all of the obligations that it's taken on, which are much, much larger than the national debt. Social Security, Medicare, Medicaid, they're all completely bankrupt and unsustainable. So to answer the question, you've got to, the best thing would be to have a controlled demolition and get rid of all these things, basically default on them. That's not going to happen. So it's going to be a chaotic situation, accompanied by much higher levels of inflation when this gets out of control. And we're on the edge of going into the trailing edge of this financial hurricane that we entered in 2007. I don't know what's going to happen in the next few years, but I think it's going to be ugly.
Would you bet with or against the USA and President Trump going forward?
Well, look, I'm so glad that Trump was elected instead of the alternative. Look at the Democratic Party today. All of these 20 people, or however many, that think they want to be president, they all seem as if they're criminally insane. They've taken over the Democratic Party, which is a cesspool of bad ideas. So I certainly hope they don't win in 2020. But they could. It depends on the economy. If things fall apart before the elections, people will reflexively vote Trump out. If things stay more or less on an even keel, as they are now, he'll be reelected. But the problem is that since Trump is associated with free market ideas, that's problematical. He's not really a free market guy. But because he is, if things collapse under him, whether it's this term or if he's reelected the next time, the market will be blamed and the U.S. will redouble its lurch towards socialism and collectivism and statism. So not much cause for optimism. It's bad news if the Democrats are elected, and a different kind of bad news if Trump is reelected. I don't know what you do about it. Things could be worse here in Canada, though.
Why could things be worse in Canada?
Because Trudeau is a total disaster from soup to nuts, start to finish. If there's anything stupid that he can do, he'll do it. I mean, he's like a member of the Democratic Party in the U.S. transplanted to Canada. So insofar as politics has anything to do with the economy, Canada's in trouble.
What areas do you think he's failed the country?
It's his general approach and attitude. He's a collectivist. And the other thing is the pattern of immigration to this country. It's the U.S. on steroids. Canadian culture is going to be transformed over the next generation by people of a totally different culture, different language, different race, different religion. Canada will be unrecognizable in 20 years. Toronto is going to resemble Karachi. Vancouver is going to resemble Beijing. Montreal could resemble Kinshasa. So, is that a good thing or a bad thing? I don't know, but it's going to be a big change. I don't think it's a good thing.
We'll have more with Doug Casey right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Doug Casey. Doug, nationalism is on the rise. How could this affect mining?
Badly. Mining is about the worst industry in the world for lots of reasons. You spend giant amounts of money on an Easter egg hunt looking for a viable deposit. When you find it, it costs you hundreds of millions to develop it. And then once you develop it, you can't move it. Governments treat you as a cash cow. NGOs hate you. Native peoples hate you. They all have their hands out. Terrible business. I like it from the point of view of a speculator in the stock market when the stocks are cheap, but as a business, pity the poor fool that gets into it.
Would you bet on China going forward?
I'm a big believer in China. A big believer in China. What they've done over the last 40 years has been unique. 30 years, actually. Actually, just more in the last 20 years. Has been unique in world history. They have transformed that country into it's incredible. And I think their progress will continue. The only problem in China, well, there are other problems, like their social credit system, which I think is very dangerous, very Orwellian. But the big problem is financial. I think all the banks in China are bankrupt. They've made lots of loans, foolishly, to politically motivated projects. Yes, the building exists. Yes, the rail line exists. But a lot of these things are completely uneconomic. So it could have a period of chaos when the financial system comes unglued. But, you know, that's in the long-term picture of Chinese history, that'll be a blip. It'll just be a speed bump. For the long term, I'm a big believer in China.
Fiat currencies versus cryptocurrencies, what do you like better?
Well, look, the nice thing about cryptocurrencies is they've drawn people's attention to the fact that the paper issued by governments is a floating abstraction that governments can and will print up trillions more of. The cryptos, and there are many different ones right now, have lots of advantages. I'm a big believer in cryptos, and it's time to get out of government paper. And cryptos is one place to go.
What do you see ahead for Canada's economy?
Look, the good news for Canada, and I've spoken to a couple of the problems just a moment ago, is that Canada is a very commodity-driven country. Commodities are low. Commodities go up. There's a lot of capital that's going to flow into Canada. So that's a plus. It's a good news, bad news type of thing.
Can playing penny stocks be like a drug?
Yes, they can be a very dangerous drug. But if you're going to get into them, now is the time to do so. But for God's sake, before buying one of these 2,000 so-called mining stocks, do some research, some due diligence as to what the company's real prospects are, and compare it to its 2,000 mates out there. Most people don't do that. They listen to rumors, they listen to promotions. So it can be the best place to be, but for most people, it usually turns out to be the worst place.
Where can people find out more about your book, Drug Lord?
Well, go to highgroundbooks.com and go to internationalman.com. That's my website that we have great articles published every day on lots of subjects. So I'd say internationalman.com is a great place to start for everything that me and my compatriots do. I guarantee that you'll be entertained and informed.
Doug, thank you so much for being on This Week in Money.
And the Pleasure's mine, Jim.
My guest has been Doug Casey, founder of Casey Research, and author of the book Drug Lord, part of the High Ground series, available online at highgroundseries.com. He was speaking to us from Vancouver.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Robert Campbell. He's the author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. Bob, welcome back to This Week in Money.
Thank you very much, Jim. Always a pleasure.
How is the U.S. real estate market look right now?
The U.S. real estate market is transitioning from a bull market into a bear market. California has already turned. And the rest of the country, some of the country is still mildly bullish, but I doubt that will continue much longer.
Where are the U.S. real estate markets in the real estate cycle?
Well, I would say that, the first major city I follow that turned, the key indicators that I use to call turning points was San Francisco, and that was back in September 2018. My timing model flashed a sell signal. And after that, the next 2 months later, the entire Bay Area flashed a sell signal. There's 7 counties around the city of San Francisco, and then in January this year, San Diego of 2019, San Diego flashed a sell signal. So California is definitely seen its best years for probably 6 years. I think the nationally and California, I think the cycle is probably going to hit bottom, where prices bottom out again, probably around 2025. And that's not based, of course, Jim, on just a wild guess. I look at the past, I believe what Charlie Munger said. He said the best way to determine the future is to study the past. And I go through and look at the cycles going back, 50 years in California real estate and look at the patterns. And clearly there's a 6-year up cycle and 6-year down cycle going back about 30 years. So that's my best evidence for, calling that market bottom. It's just, like I said, it's just not a wild guess.
On Wednesday, the Federal Reserve lowered interest rates by 0.25%. Does this look like the beginning of a long-term trend?
Yes. Yes, it is. It is a long-term trend. In fact, I just saw a chart yesterday that sometime in late 2018, worldwide there were $6 trillion worth of government bonds that were trading at a negative interest rate. In the last 8 months, that $6 trillion has ballooned to almost 14 trillion, Jim. That's a trend. And that's where we're going. The ECB is starting to lower rates again. The world's starting to lower rates. The Fed just lowered rates a quarter the other day, and that's the new trend. We're taking it back down. In other words, that regardless of what the governments are telling you, I mean, interest rates that, are still near record lows. The economy isn't nearly as good as they want you to believe. And the biggest reason is the amount of debt everybody's carrying. This debt burden is huge, and the only way that they can keep running these huge deficits and keep servicing the debts is with lower interest rates. But anyway, we're going back toward, everything's going back toward, negative interest rates where things, you buy a government bond at a 25% discount to par, so you're paying the government 25 basis points to own the bond, which is absolutely insane.
How can negative interest rates work? I have no idea.
They don't work, Jim. That's why you're racking your brain trying to figure out how they do work. You know, the last 10 years have proved they don't. And the only reason they've been trying it, is two things. They need to keep rates as low as possible in order to service that, you know, the vast amount of debt that's out there. And number two, what they were counting on is that lower interest rates would stimulate asset prices, you know, encourage asset price growth, which they have done, and that the increasing asset prices would create the wealth effect, which cause the world economies to boom. That hasn't happened. People are too deeply in debt. So it hasn't worked. It hasn't worked. And if you want that, you know, the best example in the world, go back to Japan, Jim. 1980, the Nikkei Dow was 39,600. Today, the last I looked a month or so ago, it was 16,000. In other words, and what are interest rates? Zero. In other words, you know, zero interest rates for almost 3 decades, and their stock market is still down 2/3. Housing prices. I think you can get a mortgage, a 30-year mortgage in Japan for like 2%. You think that would stimulate prices, right? 30 years after the peak in 1990, housing prices are still down 50 to 60%. So it doesn't work. Only thing it does is it keeps the economy alive and keeps the politicians in power before the system implodes.
Are lower interest rates likely to entice people to take on more debt?
No. They aren't more likely to do that. Because they're not doing it. You know, the only people who are taking on more debt is the government. The consumer, he's had it with too much debt. In fact, if you go back and look at who's taken on the most debt, it's number one, it's the governments. Number two, it's corporations, and last, it's the consumers. The consumers have been very conservative, very frugal about adding more debt. You know, they just went through that thing where, you know, in the 20s where they were adding debt like crazy, and after the real estate bubble burst and prices crashed, the average American, his net worth is still down something like 25 or 30% what it was at the peak of the housing bubble in 2006. So they're scared as hell. Governments aren't, though. You know, they don't have to worry about servicing the debt. They can just print more treasury bills to service the existing until there's a full-blown currency crisis.
Are you seeing any recession indicators?
Absolutely. My number one indicator, the most reliable recession indicator, is the inverted yield curve. And that's where you look at the 3-month treasury bill compared to the 10-year treasury note. And when that inverts, like 7 out of the last 7 recessions, that has signaled 7 out of the last 7 recessions without a false signal. And that went negative in May. And, you know, other leading indicators, you know, that's the primary leading indicator right there. And so, yes, I see that a recession is very, very likely. And what's so interesting is you watch the, you know, CNBC, financial entertainment network, you know, that has the stock market running all the time. 9 out of 10 people, even though they know the yield curve is inverted, you know what their response is? It's different this time. Big surprise, huh?
Are those about the worst words you can ever hear? It's different this time?
Pretty close. I guess the only thing worse would be, I think he's dead.
Is the Western world going down the same path Japan did back in the 1990s?
It appears so. It appears so. I mean, Japan has never recovered. You know, they tried to prop up the banking system, keep the banks, you know, from all going broke and the economy from going into a full-blown depression as opposed to just weak economic growth. And what it's led to a lower standard of living. Asset prices never recovered. Stock market prices never recovered. Housing prices never recovered. And so that appears to be the case. I mean, you can't only look at one example and extrapolate to all different countries. But that's a 30-year, living experiment right there, how well negative interest rates work.
We'll have more with Robert Campbell when This Week in Money returns.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Robert Campbell. Bob, when and where is your next seminar?
My next seminar is going to be held on October 26th, 2019 at the La Jolla Marriott. And the title of that seminar is How to Use Historically Reliable Indicators to Call Major Market Turning Points. And that, of course, is based on my book, Timing the Real Estate Market, that is in its, I just finished the 5th edition of it. That was published in 2002, so it's 17 years. I've sold 31,000 copies of that book, and the content of the book has changed very, very little, almost zero. The reason I keep publishing new editions, Jim, is I update all the data, all my charts, to show people that the timing model works today as well as it did 30 years ago. So sometimes people come up with these models that work like magic, during one cycle, and they don't work worth a damn during the next. I mean, what value does that have? Nothing. Zero. But so mine has been, that accurate for almost 40 years now. So that's why I like to have people just say, here's the proof, guys. This is why it pays to follow this thing, I mean, hey, I can't see into the future any better than anybody else, but I follow this model and it's right 80 to 90% of the time. So that's the genius, not me. You know who Bill Fleckenstein is, Jim? You ever interviewed him?
No.
Oh, he's a hedge fund guy who's a short seller. He's been around a long time. I got a phone call from him about 10 years ago. And he said, Mr. Campbell, I read your book. I've heard about you. And he goes, I have to tell you, you are one smart individual. And I said, Bill, I really can't take any credit. I'm not as smart as you think I am. I base all of my market calls on a timing model that's right 80 to 90% of the time. And you know what he said? He goes, and I'm sure that effing thing just fell on your desk one day, right? So, I mean, that's the way hedge fund guys talk. But, so I was smart enough to develop the model, and now I'm smart enough just to follow the model, and it's pretty simple. All it takes is discipline. It's like doing anything else in life. It's like counting cards and blackjack. If you have a system for counting cards and blackjack that gives you an edge, that it's only a matter of time until you take all the casino's money. That's why they won't let you play, because you've got an edge. Well, this model gives me an edge, and that's the best you're going to get in life. If you want guarantees, buy a toaster. If you want an edge, learn how to count cards in blackjack or use my real estate timing model.
How is the mortgage market in the U.S.?
Interest rates are at 30-year fixed, just fell to 3.77%, which I believe is near which is only something like 40 basis points, let's say 1/3 of a percentage point below the all-time low of 3.32% that was hit back in November 2012. So they're super low, Jim. But you know what's interesting? Interest rates. People think lower interest rates, they always associate falling interest rates, with positive outcome for real estate prices. I went back and looked at California real estate prices, the cycle. And the reason I specialize in California is because the cycles are the most extreme. You look at California cycles versus the cycles in Oklahoma, and you'd say, wow, Oklahoma looks like it's a EKG chart where the patient has died, whereas California looks like somebody that's bipolar. So anyway, the up and down from 1990 through 1996, that was a 6-year downturn for California real estate. 6 straight years prices went down before they hit bottom and recovered. Interest rates fell from 10.5 to 7.5% during that 6-year period, Jim. In 2006, 30-year fixed rate interest rates were 6.5. During the next 6 years, they fell to the 3.5, which of course was the bursting of the housing bubble. In other words, did falling interest rates, did they help real estate prices? No, they didn't. And the reason is, they help a little, but not a lot. The reason is the psychology of the market changed, Jim. It went from one of a speculative mood to one of risk aversion. And that's over 50% of the market right there. How investors perceive, what the market's going to do in the future, regardless of what the facts say.
Are foreign buyers still buying real estate in the U.S.?
I hear that they are, but I can't. That you ask me that every interview, and I give you the same answer. I have no way of confirming that to my satisfaction. Everybody says all these Chinese are buying all this property. Hey, I live in an area, a rather affluent area here in Southern California, right on the coast. It's 50% Asian. I don't know where this money's coming from, but it's 50% Asian. And why do they buy here? Because it has really good school districts. So I know they live here, but is that money continuing to flow into the U.S.? I don't know. I don't know if that's just an urban myth or it is still really a fact. But I'll tell you what these guys are buying. This is wealthy money. This is flight capital coming into the market. They're not buying low-end properties, Jim. They're buying the high-end stuff. They're showing up with $50 million. They're not buying a bunch of fixers in Memphis, Tennessee. They're going to go to Beverly Hills and buy something, or over on the East Coast, the Hamptons, and buy something, or Aspen, or Vancouver. And let me ask you, are the Chinese still coming to Vancouver?
Nope.
Why not?
Well, we have a 20% foreign buyer tax for one reason.
Oh, ouch. Wow. Yeah, you don't have to say any more. Why did they impose that?
Well, the government felt that too many foreign buyers were pushing up prices.
In other words, the government knows more than the free market, right?
Well, I certainly wouldn't say that.
But that's the idea. We're going to intervene and stop this kind of thing, because flight capital eventually returns home, Jim. If you study flight capital, in fact, that's what's happening right now in the U.S. markets. And that's what's driving interest rates down. Europe, interest rates are falling like crazy, and more countries are going negative. And so they come to the United States and they see the 10-year at 2.0. That looks great. So that money's coming over here. Would you rather get 2% on your money, or a minus 25% or minus 0.25 on your money? And that's what's going to drive interest rates, Jim. One of the big moves that I see coming is that interest rates are going back to the old low levels. And what you're going to see is even if you don't go very far out on the yield curve and stay like 1 to 5 years, I think that right now on a 1 to 5 year corporate bonds, you can get 2.8% yield. And at today's interest rate, if those things go back to where they were back at the bottom, 3 or 4 years ago, you're going to see a huge spike in price appreciation in those things. So not only do you have the safety of a short-term corporate bond, but you're going to get price appreciation and cash flow. I think that's probably the safest investment, one of the safest investments on the market right now.
Do you think U.S. stock markets can continue to go higher?
Yes, for the same reason I just told you. It's capital flight, Jim. Money's going to leave Europe. And what's going to happen to Brexit? Whenever that occurs, we are coming upon that time, aren't we? Doesn't that date get closer and closer eventually? Isn't there a drop-dead date that's certain, a date certain here? And I hear it's coming up, and it looks like, that could have very, very bad consequences for Europe, and the money's going to come flowing out of Europe, and it's going to come to the United States. And I keep hearing rumors about China. I don't like talking about China, but I keep hearing rumors that they've got bigger bigger problems than most people are aware of, and that money's going to come into the U.S. So that's what's driving our markets right now. That's what's driving our asset prices. And they're going into securities. They're going into securities. They're going into bonds. They're going into things that are liquid, where if they need to get out, they can get out. They're not taking long-term positions in real estate, especially at this point in the cycle.
Are you bullish or bearish on the U.S. dollar?
I think the U.S. dollar is going higher. I think the U.S. dollar is going higher because of capital flight. All this money coming out of Europe and possibly China, they've got to convert those currencies into dollars to buy U.S. assets, and so there's more demand than there is supply. And it's going to keep pushing the dollar up.
Are you bullish on gold and silver?
Yes, I am bullish on gold and silver. I'm more bullish on gold than I am silver. I think because eventually, within the next 2 years, we are going to have some kind of monetary reform. We are going to be forced into it because all the governments, both the federal and the state governments are so deeply in debt that there's going to be a flight out of those things because people know that they can't be paid and into some other assets, maybe corporate assets, for example. Corporate bonds, blue chip corporate bonds. And the only way that the government is going to be able to save their butt is to back that government debt with a certain amount of gold, like let's say 20% or 30% or 40%, whatever number they need to install confidence, to install confidence in the bond market, because the bond market is 5 times bigger than the stock market, and if that goes down the tubes, the whole country goes down the tubes. From a wealth standpoint. So that they got to save the bond market. They will save the bond market by backing the currency with gold. They say the U.S. Treasury bonds are, they're denominated in dollars, and the U.S. dollar now is backed by every dollar is backed by 25% gold. And people go, okay, I'm down with that. I'm good with that. So I'll stick with the bonds. I won't try to get out of bonds to get into stock. That they're okay owning U.S. dollars, owning U.S. debt, and they'll let the debt float. So I think that the surprise of the next decade is going to be that gold is going to be reset to a price to reinstitute confidence in the system to save the bond market, Jim. That's what I foresee happening in the future, and I think gold is going to be a premier wealth asset. And I think it's going to hit. We're not talking about $2,500 or $3,000. We're talking in tens of thousands of dollars because that's how much debt there is out there that has to be backed up in order to save it. So people just don't flee it and say, I don't want to own government bonds at any price. They go, okay, what's the 30-year government bond pay now? 3%. I don't want it at 3. How about 4? I don't want it at 4. How about 5? I don't want it at 5. And they go, how about 10? Okay, I'll do it at 10. Well, the U.S. can't afford to pay 10% on its 30-year debt. We're already running trillion-dollar deficits. We pay 10% on its to service those bonds. The national debt's going to go, the deficit's going to go to $3 trillion a year. We can't have that. So they're going to back the debt. They're going to say, hey, we're only offering 5%, 4%, 3%, whatever the case may be, but that all the bonds are backed by 25%, of those bonds are backed by free-floating gold. And people go, I'll do that, and that'll save the system.
Any health tips for us, Bob?
Oh my God. Yes, sir. I'm so glad that you asked. I will tell you guys, what you have to do, there's 2 ways for a man to be rich. One way is to accumulate enough wealth so that he's comfortable financially for the rest of his life. You don't have to be, Warren Buffett, but enough wealth so you're comfortable. The other way is to stay fit and healthy his whole life. And the way I look at things, and being fit and healthy is a man's wealth. And I would say the number of Americans that have, number one, have accumulated enough wealth to be comfortable financially and are fit and healthy, I would say 1% of all American men are in that group. 10% of all men are either physically fit and healthy or they've accumulated enough wealth to be comfortable financially. And 90% of all American men have neither. They have neither their health nor the money. So, and I'll tell you, there is nothing more valuable than your health, and I'm obsessed with it. Some people get into alcohol and crack cocaine and gambling and that. I've been addicted to health my entire life. my family got me addicted to it, that they were so, because it makes you feel so good, so much better about every aspect in your life. Your brain works better, you look better, you feel better about yourself, you function better, you live longer, and just everything works better. And, I almost forgot to mention, more chicks look at you when you're in great physical shape.
That could be more trouble.
Of course it could be trouble. I was at the gym the other day, and there was this girl I met there that was used to be the choreographer on the cheerleaders for the Carolina Panthers, which is an NFL football team. I learned she's 55 years old. She is in the best shape of any 55-year-old I've ever seen in my life. She looks like a 35-year-old. She works out 5 days a week. So we've become friends, and we always encourage each other. We started talking the other day, and she asked me, she said, "Do you mind if I ask you how old you are?" And I said, "No, not at all." I said, "I'm 72. And she stopped and just looked at me and she said, "I'm blown away." She says, "I can't believe you're that old." And I go, "I'm that old." She goes, "I would have guessed you're 15 years younger. I'm just a little older than me." And I said, "Well, thank you very, very much." And I said, "I worked very hard at it because I realized how that's the number one investment in my life. I take it more seriously than anything else, and I work at it every day." I said, "My goal in life is not to be the richest guy in Southern California, because I know that's not going to happen. It's not to throw a fastball 85 miles an hour like I used to be able to. I know that's not going to happen. Now my new goal is to be the youngest looking 72-year-old guy in California." And you know what she said, Jim? She looked at me, she goes, "You already are. Isn't that nice?"
That's what you want.
That's what I want. I mean, and it's not like it's not without a work, and I'm not boasting about it. It's just, it's one of those goals. So, some men obsess over making money, and some men, I obsess over staying young looking and healthy. And I'll tell you one of the things, let me tell you and the listeners here on this podcast, a secret I just learned about staying young. And all you guys are going to want to listen to this and do it. And I was sitting in the sauna with two guys in their 20s, ex-athletes out of high school, and we were sitting there in the sauna one night, and I heard them talking. They were talking about a gal named Dr. Patrick, and she has studied the benefits of sauna and the tests that have been doing with dry saunas over the years, where, something like 20 or 30,000 people have been studied for 20 years, and they've checked them out, and how young they look, how long they are, how young they look, how long they live, whether they're disease-free and everything. And the conclusions were overwhelming, that taking 3 to 4 to 5 saunas a week makes you look significantly younger, and it keeps you healthy. And these guys, I didn't know these guys. And I said, "That's interesting, guys," because I was just listening to them. I said, "That's interesting, guys, because I've been taking saunas for 50 years, since I was your age." And they said, "Really?" And they go, "How old are you?" And I said, 72. And one of them pointed the finger at me and said, "See, it works." So if you do the right thing, and I'm not saying that to boast, because, I'm obsessed with that. And if you do the right things, that like if you count cards in blackjack, do it correctly, you win. If you do all the right things with health, keep your weight down, take saunas, lift weights, run up hills and things like that, do that for 50 years, you're going to look 10 years younger than you actually are, and you're going to be healthier than 95% of all people. And that's how important health is to me, Jim. But I'm just telling all the listeners out there, if it's one secret that I've learned, I did it because I like taking saunas. Did I know that it had been tested to show that it significantly makes you younger looking? And you know why it keeps you younger looking? It's good for your skin. It's good for your skin. And that girl in the gym, that ex-cheerleading coach with the Carolina Panthers, and she said, "You have beautiful skin." She goes, "How do you keep it so well?" I said, "I've been taking saunas for 50 years. She looked at me and said, "Oh my God, so have I." So, and what this comes from, Jim, when it comes to health and fitness, if you're a baby boomer, I'm obviously a baby boomer, take health and fitness advice from somebody that's 65 years or older, not 35 years, because they don't know what happens to you when you get older. It's different. If I did half the things I'm doing right now and I'm 35, I'd be the most ripped individual in America. Now, I'm struggling just to keep being the youngest looking 72-year-old, working my ass off. So what I'm saying is that wisdom pays. you learn about some of these things only by being older. You can be smart at any age. You can't be wise. You can't be a wise 35-year-old. You just haven't been around long enough. But you can be a wise 70-year-old because you've been through the cycles, you've tried everything, you know what works and what doesn't work, and all of a sudden, those are the guys to listen to. It's like if you want investment advice, do you listen to some 35-year-old that's made a fortune during this bull market in stocks, or do you listen to Warren Buffett? Because there's a downside to everything too. So that's my advice for you guys. I mean, with regard to health, guys, I mean, just, it should be your number one priority in life. Number one. And as far as men, I can't speak for women, but I can speak for men. In my lifetime, I've come out with the characteristics of the happiest men in the world. And here's the order, and here's what they are ranked in the order of importance. Number one, that ranking is they're healthy and they're fit. Number two, they love what they do and they're good at it. Number three, they make a good income. They don't have to be making millions. They make a good income, let's say double the national average. If the national average is 50, they're making 100. And the fourth requirement is they have a woman in their life that they love dearly. If you have those four requirements, you are in the 1/10 of 1% of all men as far as being happy. It's not owning, a $20 million home on overlooking Central Park. Nope, that's not required. But you got to be healthy and fit. You got to love what you do, and you got to have a woman in your life. Got so many of my friends, that they're getting older, and now they're divorced and they're single, and I keep telling them, I go, guys, I know that you guys want a woman in your life, and you got to get on it. Because do you want to be 80 years old and single? And they go, no. They go, exactly. So work on it. It's got to become a priority. But of course, it has to be the right person, and that's just a pure numbers game. You talk to enough women, the right one will come along. I'm living testimony to that. So that's as far as health and fitness, everybody. It's making money is great, doing well financially, that's great. Just as long as you're comfortable, and you're not broke, and you're not poor, and those kind of things, that's one requirement for being happy, but it's not the biggest requirement. There's a doctor on the beach here, where I live in Del Mar. I used to run on the beach for 25 straight years in the soft sand, and a doctor used to go out swimming, a medical doctor. He had a very successful practice in Del Mar, which is a very exclusive area. And we got to know each other. And he saw me over the years, and we talked once, and he said, Bob, let me tell you something. All my patients are wealthy, and they live here in Del Mar, right on the beach. Do you know how many of those people would trade all of their money to be as healthy as you are? And I said, no, how many? He said, every one of them. And I never forgot that, Jim. It's one of those things I've never forgotten. And I said, that's how important health is from an outsider, me not just imagining it. To be 65 years old with $5 million in poor health, how much of that $5 million would you give away to be in excellent health? All of it. So, I have real strong feelings on this, everybody that's listening in on this podcast, and I'm telling you that it's the best investment you'll ever make. It's all upside. There's no downside whatsoever, and it's free. It doesn't cost you a dime. All it costs you is time, putting time in, and discipline, and desire. And then, if we can all make a few bucks along the way, which isn't that hard, really, if you've got a system and know how to do it, then you're fine. Then you have a happy life. Then when you die, at least you've led a solid life. But we're all going to die, too. So one of my goals, Jim, is to be, when I'm in the coffin, people walk by and they go, he doesn't look dead. I know I'm just blabbering away on this stuff, but I hope it comes through to everybody how strongly I feel about this, because after I finish this interview, I'm going to go run up a hill, a 3-mile hill, and I do that every day. That's minimum requirement for a 72-year-old guy to be young looking. In other words, is it easy? No. Is it worth it? Yes.
Bob, how can people find out more about your newsletter and your book?
Oh, you don't want to learn out? You don't want to attend my How to Be Young workshop? Oh, go to my website, everybody. That was just a joke. That was go to my website, realestatetiming.com. Realestatetiming.com. I wrote the book, Timing the Real Estate Market. I just published the 5th edition. It was just released in January. It has data for almost 40 years and shows you that the market timing model I created 20 years ago still works as well, if not better than it did when I first created it. And it shows you the key indicators to follow. You can subscribe to my timing letter if you like. It's only $135 a year, 37 cents a day. And if you subscribe, I'll even give you a free book. I'll send you a free book. So for those of you that, are interested in knowing how to make the best real estate decisions, what indicators to follow, you only have to follow 5 of them, Jim. Everybody goes, boy, you must take you a lot of time following all these indicators. I only follow 5 because all the other ones you don't have to follow anything else. Because most of them are just noise. You follow the key ones and that's all you have to follow, and they have such a high correlation with price movement, that's all you gotta follow. But realestatetiming.com, everybody. Just go there and you can see what I do. I love what I do. It's not even work. That's probably why I have such a great life, other than being healthy and all that. And I'm always honored to have, guys like Jim and Tom interview me. It's always a real honor that they would have somebody like me on their show, because I know some of the big time guys they have, that they interview, and I'm certainly not in their league, as far as marketing goes, but I bet you I'm younger looking than all those guys. Which matters most to me.
Bob, thanks a lot.
Hey, thank you very much, Jim. Anytime, and glad to hear you're doing well, my friend.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. He was speaking to us from San Diego. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Doug Casey, and Robert Campbell, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, I'm actually a day early to record this show because I won't be available tomorrow. And so everything I'm talking about will be up till noon on Thursday.
Larry, you're getting into the rare earth business?
Well, Jim, we've always been in the rare earth. We have a rare earth property up north, and we did some work on it, and we came up with some decent results. And but if you don't do work on them, you have to pay cash in lieu, and so we did enough work to hold the property for the next 5 years, and we got good results off it. Actually, I think we could plan a drill program around it. But first thing first, and the first thing is that we got to continue to focus on our recycling opportunity, and then who knows? Who knows what can happen over the next year? But we were pretty happy with the results that we got, and the rare earth space is really getting some attention now. So that's kind of the synopsis of what we're doing up there. So, and we're also starting work on our copper gold property, and so maybe we'll get some great results off that.
Larry, what's going on with your pilot recycling plant?
Well, right now, summer is always slow. I mean, everybody takes holidays in the summertime, and for the last week and a couple of weeks now, the people that have been working on our project have had had a holiday, so hopefully next week everything will start again, and we can go back onto it. I'm always looking at the scheduling of what we're going to do, and I'm getting pressure to get back some results on some of the samples that have been submitted to us. So that may take priority before we finish up the last step, stage 5. But it's all good stuff. I mean, the reality is these guys are interested. We're interested in getting it done. I'm sure that we're pretty confident that we'll give them back the kind of great results that they expect, and then we can move forward from there. But so it's always a shifting landscape. Ever since I've been in this business, Jim, the landscape has been shifting. At one point we paid to take batteries, and now it looks like we might have to pay for the batteries. But with our process, Jim, and I just want to discuss that briefly for a second. We have a process that doesn't have a lot of moving parts in it when it comes to the metallurgy of recycling lithium-ion batteries, and doesn't require a lot of power. There's no high heat or big motors or crushers or anything like that involved that suck up the electricity. We have a closed circuit in which we have nothing going back into the environment. We reuse the water. And this, again, is developed out of our Manganese project, where water was critical, and because we were in the desert and we couldn't afford to evaporate it or anything like that, we had to reuse it. And so we developed that technology. It is patented, and now we've got 2 patents on our recycling. I feel very comfortable with where we're at. I know the market reacted favorably. It's because one of the main generators of a good market is the fact that the people are starting to view recycling as very necessary, and that's going to be incorporated in rules and laws all over the world. And we have a solution to that, and so that puts us front and center. There's other companies out there have recycling solutions, but I can't comment on them much because I don't know exactly what they're doing. I know that there's solvents involved. I know there's acids involved. I know that there's peroxides involved and kerosene and all kinds of things that we don't use. We use reagents that are well known. And as a matter of fact, in our next patent that we apply for, we hope to eliminate one of those reagents totally. And our reagent costs are currently at about $1 a kilogram, and that'll even go less. And so, when you look at it, the electricity's cheap. We're very not power. We're not really dependent on large amounts of electricity. We don't have high costs in that area. The labor is one of the costs that's easy to figure out. The other cost is the reagents, and so I think we got a great process, and I think that the patents that we have, we will be able to protect that process, and I want to get on with the testing of this other material that we got in, because that's always exciting to return good results to a potential client. Jim, I have to talk a little bit about the markets. We had a great market up till last Friday, and this week has been kind of a slide back for us. Volumes are dropping, so that's always a good sign when you're sliding back. But the good thing about it is that we had a gap in the market at 20 cents, at 19-20 cents. We've gone back and filled that gap now. So for the chartists out there, that's always a good thing. But with everything that's developing for us and the recognition we're getting, I don't see us being down here for very long.
Larry, for people new to American Manganese, what are you all about? We're
a critical metals company that holds, some properties that have critical metals on them. As a matter of fact, all our properties do, the 2 in BC and the 1 in the U.S. with the manganese. We developed a process that was patented back in 2012, and it's now patented in 4 countries. We have taken that patent and that process, and we've adapted it to recycling lithium-ion batteries, and that is now patented in the U.S., and we have patents pending in 7 other countries. We have a second patent that was just recently issued by the U.S., and that is, again, a U.S. patent, and that sometime we'll be applying for patents in other countries on that, and we've got another patent in the chute. So that's kind of what we're about. We want to take the economy and make it a circular economy. Nothing goes back into the environment, and that's pretty much what the company's all about. If you want to really investigate the company, go to AmericanManganeseInc.com. In the meantime, we're traded on the Canadian Exchange, Toronto Stock Exchange Venture, under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can reach us at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on August 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.